Ladies and gentlemen, the stock market legend Tom Lee has predicted that the S&P 500 will end at some spectacular high level at end of this year. And meanwhile, at the same time, many giants are now warning that the AI bubble is getting too big and too dangerous. So who is right, who is wrong? Today, I will attempt to analyze this and give you my perspective. Let's watch on. So Tom Lee sees the S&P 500 to end at 7,000 points by end of the year. But many big guns are now warning of AI bubble, and who is right, who is wrong today. We'll attempt to analyze this. And as usual, these are my disclaimers. This is for education and entertainment and not financial advice. Please remember, hit subscribe and stay updated. This is a time that you want to stay very closely with my videos. So the great divide is this, okay? Tom Strat, Chief Advisor and Founder, says that the S&P 500 could hit 7,000 this year. And right now we're at 6,700 and is roaring strongly with 3 more months to go. If every month it hit 1,000, that would be fantastic, right? But meanwhile, we have got GIC already announced that they are very cautious right now of a hype in the AI bubble and is building up. And Jeff Bezos, the founder of Amazon, is saying that the AI is in a bubble right now. And Goldman Sachs has also come out and say that a drawdown is coming within 12 to 24 months. So the market is now torn between, I call, ultimate optimism and quiet fear. So who's right, who's wrong? Now, AI is dominating the entire perspective of Wall Street right now. The S&P 500 has shot up phenomenally because of artificial intelligence, and there is a lot of money has poured into AI right now for funding. The number, I think, has reached $300 billion, and that's the entire GDP of Singapore. And there's a lot of value added right now in tech giants, namely NVIDIA, Microsoft, Alphabet, and so on. So right now, we are all very worried that this is going to be a speculative outsized bubble that's dressed up as a new industrial revolution. So let's watch on. So Tom Lee, my favorite analyst, I'm not saying that everything he say is right, but so far, everything he say come to pass. And there are times where I challenge his thoughts and I turn out to be wrong, he turned out to be right. So he thinks the S&P 500 could hit a high of 6,900 or even 7,000 points. That is approximately a 20% upside by end of the year. And he even thinks that over the next 5 to 10 years, it will hit some magical numbers of 15,000 points for S&P 500 as productivity revolution will uplift corporate earnings and market multiples. So he says that a lot of the investors are too pessimistic about short-term noise and underestimating the real power of AI. So that's what he says. And I too think that AI is a very real thing right now. It is not a hype. I'm using AI at the astronomical level right now. Every of my slides today are done by AI in a matter of seconds, not even in hours or minutes, seconds. So Tom Lee's evidence for S&P 500 is this. Number one, he thinks that the government shutdown fear is overblown. And I've already analyzed for everybody a couple of days ago that actually the government shutdown is no big deal. Okay. In fact, after shutdown, there is going to be a big jump as what we see historically. And AI tends to drive real margin expansion. So there is huge productivity gains and automation right now. And right now, corporate earnings still remains very strong across the world, especially in US. And as the interest rate cuts, there's going to be a lot of money from money market fund will flow into the equities and bonds. So he thinks that a broader rally is going to happen. And right now, the investor sentiment, especially those naysayers, is just too negative. That's what his perspective is. And I'll be frank with you, I don't disagree with him. Okay, so the US market remained very strong, as we can see. It's incredibly strong. It has been hit again and again and again by some rubbish that Trump throws at it, shutdown and all this, and nothing happens to it, man. So right now we have a lot of upsides that potentially could come. And once the interest rate get cut, very likely you will support a lot more uplift in the market. A few days ago, I've also warned that GIC is now issuing warning and saying that there's a hype bubble that is coming in the AI space. And that's issued by the GIC CIO. And I'll quote him, if technology doesn't catch up with market expectation, then we are in a bubble. So even the sovereign wealth fund of Singapore is actually giving the warning. So if that's the case, then maybe there is some danger there. I won't dwell too much on this because I have a video already covering that. Now, Jeff Bezos of Amazon has came out and said that AI is in an industrial bubble, but it is real. Industrial bubble. Now, so he says that, there is a very rampant speculation right now. Every idea, good or bad, is getting funded in the AI space. But he did say that AI is real. It will change every industry. And he compares that with the 1990s biotech boom. And now, even though there were failures, it did lead to many breakthroughs in the medical technology space. So industrial bubbles, while it's dangerous to the stock market, can be good because when the dust settles, the society benefits. So he recognized AI is real and will benefit tremendously. So you and I need to get ourselves upskilled with AI very, very quickly. Every time I learn something, I'm being thrown far behind already, let alone many of you who haven't even started in a massive way. Now, Goldman Sachs have also came out. The CEO of Goldman Sachs and not some second or third tier analysts have came out and say that, that there is a drawdown that's coming. He predicted that there will be a drawdown expected in 12 to 24 months. And I think that's quite serious. And whenever new tech accelerate, capital overshoots potential. And when there'll be a reset, people will feel good. And this blind optimism can drive investors to overshoot the valuation. None of them are saying that AI is not real. What everyone is saying is that it is too expensive, And as a result, and the correction might come soon. So if we were to draw the lessons from the dot-com parallel, from 1990s all the way to 2000, valuation surged phenomenally by 300%. And by the way, that's not far away from what we are right now. And then there's a massive collapse of 80%. Trillions of dollars were wiped out. And surprisingly, after that, the big real winners emerged, namely Amazon, Google, eBay, and whatsoever. And the question right now is that, will that be the same in the AI space? Now, history does not repeat in a mirror image, but it generally tends to rhyme, and we don't know how it will rhyme. So let me say again, as I quote Jeff Bezos of Amazon, bubbles can be painful, but they leave behind real infrastructure and innovation. So the market concentration risk now on S&P fund is very high. We have got right now about 30% on the top 7 AI stocks. NVIDIA alone is really occupying 7% of the S&P 500, and the rest of the market is here. So there's a lot of concentration risk right now, and we have so far as a little pinprick on this bubble, the whole thing might just explode. So it's kind of scary. So right now, we have got two very extreme views. We have got Tom Lee basically saying that S&P 500 will hit 7,000 points and could go even much higher. And then we have got GIC, Amazon, Goldman Sachs, all warning everybody that, hey, you got to be careful. You got to be careful, So who is right, who is wrong? Well, the interesting thing, if you have to step back, is this. Everybody agrees that AI is a huge renaissance and revolution, is transformative. There is no one who says that the AI is something that is a hype, now, everybody is just saying that the valuation is outsized and overvalued. So the question right now is, is this going to be something that will create instability and potentially a catastrophic outcome for the stock market? It's hard to say. So it's a battle between FOMO, fear of missing out, versus fear of losing out. So which one is going to be the right one? My take is this, we can't control the market, but we can control our exposure. I don't know when is there a bubble or is there not a bubble. I don't know if there's a bubble, when it's going to burst. It's very difficult to tell. But I know that I can position myself at a place where I can ride both the wave and also protect myself with dry powder if the market were to turn the other way. So I want everybody that this is my position that I'm taking. You think for yourself, okay, that you how to capture both the upside and protect yourself from downside. So the secret is this thing called rebalancing, okay? Not overreacting. I'm not telling you to sell, 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 okay? Now, I'm telling you that there is a wisdom in some stock market maneuvers that we can think through carefully. So let me remind everybody again, I'm not telling you to sell, I'm not telling you to buy, I'm just telling you to be conscious of potential risk. And today is the biggest risk is overconfidence, okay? And right now, when the whole market believes that AI cannot fail is where the risk is highest. So I think that because AI is still going to be very positive in my perspective, I personally using AI more and more, and I think it's going to change my life. I think that we should continue to let the compounding happen, but be very disciplined in our rebalancing and stay humble. And that's how we can accumulate real wealth. So right now, a lot of people ask me, Mr. Lu, what can we rebalance to? Okay, there are many things you can rebalance to. You can put into bonds, you can put into globally diversified index, and so on. But the one that I like super most is CPF voluntary housing refund, because it's a safe 2.5% risk-free return. Okay, and you can put a lot into it without worrying that you will ever jibabu. So this is my biggest favorite. CPF voluntary housing refund. Okay, that's one very safe place to rebalance to. So let me say again, the stock market of the US have survived 100 years. It has survived through all sorts of crises and survived through all sorts of hype. So I think that as long as we play it safe, okay, don't over pursue crazy returns. I think time will allow compounding to happen in a great way. I shared with everybody yesterday that there is a magic number. The number is 15% for a CAGR, and that beats any kind of gamblers in a big way. So that builds all the mega billionaires. And I think this number is a very good number that I'm going to look forward to. Any number that goes beyond that is something that will send you into racing. So I think it's better to be consistently wealthy than to be occasionally lucky. So this phrase, let's be very clear. So in closing, the stock market is full of booms and busts and bubbles. So this is just part and parcel of it. We got to stay balanced so that we can exploit the advantage of both things. So I think that there's lots of learning for everybody, and I hope that you'll benefit from my sharing. So remember, hit subscribe, and I'll see you hopefully in live stream. I can find the right time and the right internet bandwidth. Europe internet is really very bad, but let's try to catch up each other as quick as we can. Okay, bye bye.